Hi there, it's Peter Temple actually it's Monday or Saturday, May the 28th, 2016. And this is the market report for Tuesday, May the 31st, because in the US the markets are closed and it's a Memorial Day holiday. So what I want to do today is look at the bigger picture, and then I'm just going to focus on really a couple of indices because they're all doing the same thing. And if I take a look at ES, which is the futures, and then the S&P 500, you'll get a pretty good picture of what I think is going to happen. I'll touch on gold, and I really want to pay attention to the currencies because this theory or this scenario we're going through right now of all the same market really plays a big part of looking at the projection for this week and why I think it's going to do what it's going to do. And I want to look at the waves and just show you why I think the move up this week, although I was expecting maybe 5 waves, is actually an ABC. And so it's going to partially retrace because I think we're in an ending diagonal. So here we are sitting looking at the 4-hour chart of the S&P 500. And this is going back to the most recent high, which is not the all-time high, November the 3rd right here. This is my C wave up. And then we had what I thought could have been a truncation here, but I mean, I've never really seen a truncation in the Elliott wave. I don't really think they exist. And even the ones that I see in the Elliott wave book, you go back and look at them and they simply look like ABC drops, and so I don't know that Elliott wave ever fails. I don't know in its history of the market that it ever has. So here we have an ABC down, which means it has to retrace, and yes, it certainly did. I didn't know we were going up into the top here until we were sort of in this area, and I got a feeling that, hey, this looks like a great big second wave, which is what I believe is tracing out, and that we should hit this previous high of 2116 in the S&P 500. We may go a little bit higher. There's nothing to say that we can't, but I do not expect us to go to a new all-time high. What we have here, and if we look at some of these letters, I've tried to make this relatively obvious. We have an ABC. This first wave up had no second wave in it. So therefore, it really projects the entire wave. It says that this wave is going to be a corrective wave. If it was going to be a motive wave, each of the subwaves would have to have 5 waves, and because this one didn't, it just totally negates the idea of a motive wave. I've said this many times. So we've got a C wave here, and the C wave has traced out 5 waves, which a C wave typically does, except this last wave here is in 3 waves. It's got an ABC, so it's very obviously that this is a corrective wave. When I say it goes up in 5 waves, they're not necessarily ever perfect. And in fact, this is really kind of a large 4th wave here. But if you look at the entire corrective move up, this wave is so huge, I've called it a B wave, because in an Elliott wave, you have to have the right look, and this one is an A, if you look at the blue here, A, B, and we'll finish up a C right here, and I think it'll go just above this high, maybe a little higher, maybe 2020, we'll see what happens. And so that's our look at the overall picture. Now, once it gets up here, this is going to be important. And I would look ahead to Janet Yellen and the 15th of the month because we have another Fed meeting, another announcement on the 15th. And I think that's going to be pretty close to the top here. I would expect that, or I wouldn't be surprised to see us come down the next day after that and to see in an ending diagonal, which I'm projecting here, we're going to look at that we go into a throwover based on the Fed meeting announcement, and then the next day we just head right down, and the third wave is going to be huge, and it's going to usher in a whole new era. Now, let's go take a look at the ES, the futures, and we'll look at it for what I project coming up this week. Here's the ES. This is a 60-minute, 1-hour chart, and we're sort of zoomed in here to see what happens with this wave that bottomed in what is the 4th wave, and you saw this in the larger chart. The ES's futures really mirrors or runs in parallel to the, I guess it also mirrors the S&P 500. So, but it runs 24 hours a day. So you tend to get bigger waves here, and you get to see all of the waves, not just the ones that show up in the S&P, because of course, while everybody's sleeping in the US, of course, the futures are still moving. So I had originally labeled this because it looked like a first wave up and a second wave down. So this would have been a 1, 2, 3, and this third wave ended up being, as of Friday, exactly 1.618 times the length of the first wave, which is a typical wavelength. But when this came up in a first wave, it did this second wave down here. And the second wave, when it bottomed, went up so rapidly, there's no second wave here. And I pointed this out at the time, and I said, gee, this does not look right, and I expected this to fail. But it didn't fail. It's gone all the way up into a C wave. So I've relabeled this whole thing an ABC. And this looks to me like we're not going to do 5 waves up to the top here, which in the ES is about 21.10, I believe, was the previous high. I'd have to go check that out. Somebody will correct me, I'm sure. Either way. But I see an ABC here, and this looks like it's going to be an ending diagonal. So I would expect this wave to come down in both the S&P and ES to below the previous first wave top. And so that's what you would expect to have happen, because when you have an ending diagonal, the waves have to overlap. So I would say this is 1, this is 2, 3, 4, 5, and 4 is usually short, and you put a little line here and a line from this 1, and you'll get an ending diagonal. So this is really the first big wave, and we're just starting this ending diagonal, and it will probably have a throw over. And I would say this would probably take us a couple of weeks to get to Yellen and her little talk, and so that's what I'm projecting. Now, jumping into a 30-minute chart of the S&P 500, we'll look at the previous high here, which got very close to 2116, which I've been touting as our probable target because this was the previous high in November the 13th. So that's where we're going to, November the 13th of last year. So we had this overlapping wave down, which is obviously corrective to an Elliott waiver, and it always is in letters because it's corrective. And I had projected a 1, 2, 3, or you could look at it as a 3, 4, 5 up, but we have stopped here on Friday, and I expect us to come back down. And when you look at this wave, and I said this in the ES, there was this problem with this second wave, and it didn't have a second wave here either. And this wave here is very much larger than what we would see up here as a fourth wave. So I'm projecting, although and when you take a look at the actual lengths here, if we say wave 1 is a 1, wave 2, or rather wave 3, should be 1.618. Yes, it is. So this is all of wave 3, but I'm calling it a C wave just because this last wave looks like a 3 to me. It's overlapping. And so that kind of gives away that this is corrective as well as the 2 down here. So I'm calling this whole thing corrective, and ES supports that, and it looks like we will come down here, and I would expect us in the S&P to come down again below this A wave or first wave so that we have an overlap. So we're going to have a fairly big drop. And if you look at this, the 62% level is sitting at around 2054. So we will likely get down here in a 3, wave in 3. And then we will go up in a wave in 3, somewhere around in here, and then we will have a 4th and a 5th. And so that's what I'm projecting. That's what I think is going to happen. Again, we may go above 2116, and I'm looking at the end of this in a couple of weeks, probably around Yellen. So why do I think it's going into an ending diagonal and we're going to have a big drop? Well, this lends itself to that. All the same market that I've been talking about. This is the euro, and it's a daily chart, and this is a corrective wave. You can see all the ABCs. I mean, it's been doing this, it seems forever, but it's really been about, well, it's over a year. We're back in here in sort of March when it bottomed of 2015. So going up, and I thought we were going to have, this is the 38% retrace level of the wave down, and we missed it slightly here. I thought we were going to go up and hit it, but now I believe this is a triangle, and what we're going to see, we still have to bottom here in wave D, so we still have some down to go, and this is why I see this is leading a little bit, but we have a little more down to go, and I think that's why we're going to get a large second wave down in our ending diagonal. And then we have one more wave up to go, and that is leading me to believe that that's going to happen at the same time we see the US equities go up to a top. So this took us quite a while. I don't know the actual, maybe I can just jump in here a little bit to sort of see how long it took us to get down to that level. The hourly 2-hour chart. It took from, so it's taken about it's taken a month to get down here, and because this is going up, should be in 3 waves. It may take, I think, a couple of weeks to get back up. This isn't quite a month. It's a little bit less than a month. So we'll see what happens. It may take a little longer, but going back to this daily, it's got to go up here. We have a shorter distance to go, of course. It's got to go up here, and then it's going to turn. And longer term, the euro is going down, and the US dollar is going up into a 5th wave. Somebody asked me about that this week. I've talked about this pretty well ad nauseum. So this is where we're going on the euro. And I see this going up here at the same time that the US equities top, and it should top here when the US equities top. I want to take a look at CAD, the Canadian dollar, because that is also saying the same thing to me. Here's the big picture of the Canadian dollar. This is a daily chart. From its top up in here, which is to everything else at bottom, because this is the US dollar CAD, so it's kind of a reverse chart from euro US dollar. So you can see that this has been going, coming down, and we're doing, this is a big 4th wave. It's at the area of the previous 4th wave here. And we are going down in another 4th wave here, or what looks like a B wave, very similar to what we've seen in the US equities. But we haven't bottomed yet, and we need to get to this point, bottom here. And so I would see this happening at the same time that we have our second wave, a very large second wave in US equities, and that's coming up. And so we're in the process. And then we've got one more large wave up, which should go to a double top here, or may even extend a little beyond it, because we're not quite at this previous 4th. So we'll have to see what happens here. But I would expect that to happen at the same time the euro tops in that E wave, at the same time that the US equities top. And so this is all the same market that I see tracing out all at the same time. So here we are zoomed into a 2-hour chart on the US dollar, Canadian dollar, and you can see that we have got the bottom here, which I had pointed out. This is the C wave, bottom of the C wave, and this would be at about the previous 4th here. And then we've backed off in this larger B wave or 4th wave this way, and we're going to go back up to the top here. But first we have to bottom. And if you take your Fibonacci tool and you find the A wave, typically your bottom or your extension wave, your C wave, is going to be the same length as the A wave. So we've got a B here and we've got this C wave here. So that puts our length at 1.33, and I'm expecting this wave to top there and then head back down to finish off this entire sequence. And that would mean that the bigger 4th wave has finished, and we'll see this then head up at the same time the euro heads down longer term, and at the same time the US equities go into their 3rd wave. And so this is all moving together. So this has got a fair distance to go, but it is the C wave, and you can see how it's got an ABC here as well. So this is all very much corrective. And that's what I'm see tracing itself out. I expect this to trace out at the same time that this wave comes down starting on Tuesday in the US equities. So that's part of the ending diagonal. And that about wraps it up. I'm going to take a quick look at gold. And here we are with XGLD. So this is gold daily chart. And this hasn't been that much of a change. We actually have dropped, as I projected here. We've got the long-term bottom, which was an ending diagonal actually here. And then we've had this very motive wave up. It did 5 waves. Actually, we've got a 1-2-1-2 here. So we've got 5 waves within 5 waves. And that topped just as I projected at 1300. And we're coming down here. We've done the start of an ABC, A, B, C, but I think we're going to have, this is probably going to drop a little further here to about 11 85 or so, because that would make this wave a projection, actually 2.6, so 2.618 times the length of this first wave down. So an A, B, C. Then I think we'll bounce in a B, which will maybe take us to here, and then come down in a C to finish off this wave, and then this is going to start heading up. So that's our projection, and I'm not going to really change the chart. Actually, I'll add this into the charts in the blog. It hasn't changed that much. The projection is still the same. The longer term projection is hanging around somewhere, I think, in the forum, and that's what is happening with gold. So I think we're pretty good for projections this next couple of weeks. We'll see whether we come down hard over the next couple of days starting on Tuesday. That's what I'm projecting, and we will finish up an ending diagonal, but of course I'll be around to do one more update, I think, before we top. So great trading. Be careful out there if you're trading the U.S. market, because it is pretty volatile and a little hard to figure out. The equities, or rather the currencies, I think are the place to be right now, which is where I am. But we're looking for a top very soon.